What's up, everybody? We're going live. I just want to wait for some people to get on and get notified. So just want to make sure that we are, in fact, live. So what's up, everybody? It's YL with Blockchain Academics. I'm just going to post this in our Discord so people can join us. We're going to go into which industry creates the most millionaires, and that is still creating the most millionaires today. And you can take a guess at it. It's not Bitcoin. It is financial. It's the financial industry. It's the stock market. The stock market is and has created the most millionaires to date and is still creating the most millionaires to date. We're going to look into various different stocks, the S&P, the market, and just overall thoughts and strategies on how to invest. So currently we are investing a ton into cryptocurrency. This is a cryptocurrency channel, but a lot of Bitcoiners, a lot of investors in cryptocurrency, they kind of turn a blind eye to traditional markets, and traditional markets, to ignore those would be crazy, especially with the given stats and the financial returns they give. You couldn't just ride the crypto market if you're trying to do big things. You wouldn't be 100% in Bitcoin, 100% in other altcoins. You'd want to diversify, have different buckets, have different investment vehicles, and the stock market has definitely proven itself. So a lot of people like to diversify in the stock market. Maybe if they're going to their bank, if they're speaking with their financial advisor, they may hear a lot of diversification, get diversified, buy all these stocks, and some of them will do well. But people like Warren Buffett or Phil Town, I forget his last name, from One Rule Investing. These guys are all into picking a few companies. So we're going to look at a few companies today. Some of my favorites, some companies that Warren Buffett has invested in. And success leaves clues, guys. I wouldn't just ignore what these billionaires are doing, especially these super wealthy billionaires who've created it all from investing in the financial sectors. I wouldn't ignore what they're doing. So the Warren Buffett specifically, he goes pretty much, I don't want to say all in, but he goes pretty large in these companies. So let's look at the S&P right now. So the S&P posted a new high. It's breaking highs. It's a bull market right now. Everybody's making money, and this is where I want to look into some random drawing. So we're going to look on the monthly. The S&P posted a new high. This is where we crashed 1999, 2000. We had the double top here, and we crashed in 2008, recovered in 2009, and now we're posting a new high. So if we're looking from where we crashed to where we are at, that's a 320% gain from the bottom. So it's almost, let's see this one, 89%. So we're almost four times, we did four times a bigger move, a larger move than we did between 2000 and 2008. This was also an 8-year cycle, and this is almost 12 years right now. So this, to a lot of people, is overextended. I wouldn't recommend, it's in a bull market, so I wouldn't just say start shorting this. It's going to start crashing. There are no signs of reversal. There's no signs of reversal right now. I wouldn't try and call a top, but there's a reason Warren Buffett is in $110 billion cash. That's not in a position, that's in cash. And I'm assuming a lot of people are they're assuming that a bottom is coming, a huge crash is coming. We're going to see a large financial crash, and I'm expecting that as well. Where the bottom may be, we cannot, it's like trying to catch a falling knife. You can't guess where a bottom can be. But this is a super extended move over the last 12 years, and we've retraced more than 100% on the last crash um, as screwed as it sounds, like I wouldn't be surprised if we retraced 100% of this move and see one of the largest crashes we've ever seen. And that's kind of, as screwed up as it sounds, that's what I'm looking for, because I want to play the market both sides. So let's get into making millions with the stock market. So let's look at some stocks right now. Nike. I'm not wearing Nike. Am I right? No, this is not Nike actually. But I wear Nike a ton. It's Fortune 500 company. They're doing amazing. Look at this. All these stocks are almost posting new highs. Like the stock market is raging. Everybody's making money. And this is like back in 2008. I wasn't trading back then, but the sentiment was similar. Everybody's making money. Everybody's throwing money into the stocks, into any stock. Like all stocks are making money. Marijuana stocks, Beyond Meat. Like you can throw money anywhere and it's stock market's going up. Is it a good time to buy now? It's a whole different question. If you're buying long term, it depends if you're investing or trading, but let's look at the money. So 2008, 2009, let's say this is a strong reversal candle right here. As you can see, market structure is being broken. Let's say you bought on the monthly reversal candle, but let's say you waited a little bit more for it to come up here, break the resistance here, test it, and start trading. So if you waited for confirmation and you even bought here to today, where it's sitting at, that's 456% from 2009 to May. We're not even there far. We're not even there. Let's just say 10 years, from 2009 to 2019. 10 years, 456%. That's 45% every year. That's compounding. You put $100,000, you're going to get 45%. We're just going approximate because maybe the first year jumped higher. So we're just looking at a 10-year period. But let's just do this for math's sake and say it went up 45% every year. So this is compounding. On 100 grand, you'd have 45 grand profit. That's 145 grand. And then the next year, that's 45% on that 145 grand. This is crazy. You don't see these returns anywhere else. And you have banks offering you like 3%, 2%, maybe a couple percent a year per year on your money. When you can take your money, literally put it in the same account, putting it in the same 401k, trading account, TSFA account, broker account, whatever it is, literally putting it there, buying the same stocks and earning 10x, 15x, 200x more than what they are offering you. It's crazy. And people are just uninformed, they're uneducated, and these financial bankers, they make it seem so hard. Like, oh, I went a couple days ago trying to open up another account. It's like, oh, and I don't share much information with them. Like, oh, I teach technical analysis. I have my technical analysis certificate, and I'm in the financial sector, because I don't want to hear it from them, and I don't want to hear their advice. They're so negative, pessimistic. Oh, you're going to lose all your money if you don't invest with us. It's super risky, and they try and put this fear into investing that's like so hard that nobody else can do it but them. But clearly, they're not doing the best. They're just using your money, and they're offering like ridiculously low interest rates to you guys, and you can just do the same thing. So this is Nike right here. Let's look at Costco. Costco, huge returns. 2008, let's say you didn't catch the bottom, you waited to around here as well. 320% at the bottom. This would have been 629%. So if you're doing some technical analysis and you got into these at the bottom, you're making a ton of money. So if we just take this from 2009, we'll just take it from here, because they're not going to catch the bottom, but that's a few months after. So prices are starting to gear up after the long bear market, and that's a good year after. So 432%, it's similar to Nike. 45%, 43% per year, all legal, tax-free, depending on which account you're using. If you're using a tax-free account, that's just like 45% a year. You don't see that anywhere, guys. Like literally, You know what I mean? And you can just do this yourself, putting it in your own investment accounts. You don't need these financial advisors to do this for you and offer you a fraction, like literally shekels, like pennies. They're offering you nothing. So that's Costco and Nike. If you have these for the last 10 years, you're making 45% minimum per year compounding on your money. So this anticipated crash, there is a ton of opportunity. You can definitely, you don't need to catch the bottom. You don't need to, try and guess where the bottom is. Let that reversal happen. Let the momentum shift. Let the market structure change from a downturn, like lower lows and lower highs, to higher highs and higher lows. And you're more certain, more confident that this is going to start moving up. And you start using stop losses as well. You get in, it's not the bottom, you have a stop loss. Maybe you're in profit, you took some profits, maybe you took a small loss. That's trading. You're not going to win every trade. But if you're buying stocks, this is for the long term. Warren Buffett said, if you're not going to own a stock for 10 years, don't think about owning it for 10 minutes. And this is where I go into like people just buying the S&P 500 or people buying 50 or 100 companies. It's like it'll outweigh and kind of average each other. You'll have some winners and you'll have some losers, and you're better off just picking a few companies. It's like if you're going to buy a stock, it's like buying the business. You want to know everything about it. It's like you're literally writing a check to buy the business. You are a shareholder. You own the stocks. That's the future of that company is important to you. You want to know if they're around for 5 years, 10 years, 15 years. What's their competitive advantage? You know what I mean? Like, why are you buying them? Did you see it on Twitter, Facebook, YouTube? Watch this video and decide to buy Coca-Cola. So we're looking at this as well. This is 2008, I believe, 2007, 2008, 2009. So let's say you bought right here. We didn't buy at the bottom. We bought right here. Coca-Cola, 122%, about 12% per year. That's one of the least returns that we've seen. We're going to keep looking at some more as well. So Salesforce. I'm not going to look at the we can take a look at Amazon and Facebook. I don't know why it's not cheating, but these are more technologyonline.com, and that's boomed over the last 12 years. So those are crazy returns, definitely crazy returns. If you hold those, like, you're laughing. Salesforce, 2009. If you know what Salesforce is, they've been crushing it. If you're an early investor in 2009, after the crash, 1,500%. You're making over the last 10 years 150%. Literally every year, you're multiplying your money by 1.5, and that's compounding. So literally 157%. That is crazy. That you don't see that anywhere else. $1 million invested here would be $15 million approximately. 100K, $1.5 million approximately. It's a ton of money. Let's look at Facebook. 2013, okay, their stock was not open for public since then. Would have made a killing. Amazon, 2008, would have made a killing. Like, this is just crazy. So what do I think? Let me just see from here, 2009. Let's just skip to 2009 to here. Okay, it's about 2000. So that's 200% per year. 200% per year. That's compounding your money every year, and you're just holding this long term. You don't find any other investment instrument vehicle that produces these returns, unless we're talking about cryptocurrency, and I'm going to touch on that last. So what I'm looking for this next financial crash, and this could happen in a year. This could happen. What's up? Is there? This could happen in a year. This could happen in 3 years. This could happen tomorrow. I don't know when the crash is going to happen. I'm not going to time or bet that the top is in, but What I am looking for is strong companies that have performed well in the last crash, that have survived the last crash, that have a competitive edge, that have the ability to grow for another 10, 20, 50 years, that are like a staple in the community or whatever niche they're in, like Nike, Costco is good, Coca-Cola as well. Uber. So I'm looking at for technology companies specifically. So Uber has been taking a killing, as you can see, from the top $47 all the way to $25. So I would like to buy companies that. So we can go back to Nike, for example. So I'd like to buy companies that go at least 70% discount because I know the value's there. I'm buying it at discount. It's like me buying $100 bill for 30 bucks. You know what I mean? And just holding it. So from the top in 2008 to the bottom, about a 42% decrease, which isn't bad. So if we can get Nike under 50 bucks, and on some major support areas, you see, that'd be a great buy. I'm not saying buy Nike for under 50 bucks, but I'm just giving you an example. So investing in a few stocks that you've taken the time to understand. FedEx isn't going anywhere either. So from 2008, it's taken a large crash, not sure why. From the top was 288 till now is 100%. So 10% a year if you held it through that downturn. We're just looking at Fortune 500 companies. So you would want to pick a few companies that have the potential to grow, a few companies that basically you believe in, that you are willing to buy, and that you think have a long-term competitive advantage. So you would enter these positions and you would just build them long term. And you wouldn't have to trade them like daily or weekly. You're looking at them on the month, on the weekly, on the couple month time frame, and you're not going to have to trade them. You may switch over bear or bull once there's a confirmed change in trend, and that's long term. So you're not changing your position for maybe 8, 10, 12, 15 years, unless you want to hold it through the downs as well. But I feel like I am, and other people are pretty knowledgeable and they're experienced to be able to flip out of positions from long to short. And it's super profitable to switch positions and catch the short side of the market. So we went over stocks and what creates the most millionaires in the world. I wanted to show up this graph right now, and this is Bitcoin, specifically Bitcoin, not other cryptocurrencies. So Bitcoin, and this is over a 4-year hold period. Bitcoin is the strongest asset in the world compared to US stocks, US real estate, bonds, gold, emerging currencies, and oil. We just said US stocks has created the most millionaires in the world, and this is real data. This is from Willie Woo. Met him in Bali. He's such a smart, amazing person. He's super smart, does on-chain analysis. I've never heard or looked into it before he introduced it. I got to sit next to him in dinner, and he just like blew my mind. This guy's so knowledgeable. And if you go to his website, Woobull, he has a ton of tools that he's literally created, and you can use to use those analysis that he's created to see where Bitcoin's going. And I saw his video just yesterday, said he was going short, or Bitcoin is going short, and it just dropped like $700. And those are very profitable moves to catch. And this chart that he's made, this data that he's put together, the Bitcoin is the strongest asset in terms of a 4-year hold period. We don't have much data to go from. We have about 11, 12 years. So more data will come and we'll be able to present more as well. But as for now, Bitcoin is the strongest asset in the world and a 4-year hold period. And I still believe that it will be the strongest asset for the next 8 years. And I'm looking forward to see what happens. And this is where I wanted to speak about stocks and crypto, because people who are in crypto, they kind of turn a blind eye to traditional markets, and they're maybe 100% into crypto, and they don't actually have any real, I don't want to say real, Bitcoin is 100% real, but they don't have any traditional sorry for the words I use, not real, traditional. They have Bitcoin, but not any traditional assets or stocks, bonds, RSPs, whatever it is. So I would recommend, depending on how old you are, how much money you have, and this comes down to management of your portfolio management. I would highly recommend looking into other markets, not just holding Bitcoin. I know you want to expose yourself to that much reward, but you're exposing yourself to that much risk as well. And I'm young, I'm 24 years old. I don't mind exposing myself to I'm like 95% in Bitcoin, but now I'm looking to rebalance my portfolio, especially when we're getting closer to maybe a financial crash, a big downward move in the market. And then I can rebalance my portfolio, and I can have I can kind of lock this equity and lock this money in, and it's never going to be touched. And I can see these returns 20, 40, 50, even 100% per year, depending on the stocks that I choose. So when we're talking about Bitcoin, I've never seen any returns larger than what I've seen in the crypto market, 4,000% in a couple of weeks. Hundreds of percents here. Altcoins doing 10x, 100x, 40x, thousands of percents, hundreds of thousands of percents. Never seen that in any other market. Probably won't see that in any other market unless something else jumps out like crypto that's new, maybe some AI type of market. What platforms do you recommend for traditional markets? So I'm in Canada right now. I'm a Panamanian resident. If you're in Canada, a TSFA account, so a tax-free savings account. I think TD has the best platform in Canada. And why I recommend this account is because you can go to Robinhood and just open up a brokerage account and start trading stocks, but you're going to get taxed. If you make $1,000, not 1,000, let's say you make $10,000, $20,000, you're going to get taxed. There's going to be trading fees, which most brokerages and platforms have. But if you put it in your TSFA account, and if you can see your allowance, if you go to CRA.com or whatever website, they allow you to see how much you can put into this account. Because every year, I think when you turn 18, it's about $6,000, $6,500 that you can put in a TSFA account. Once you start putting money into this TSFA account, that money you've put in is already taxed, assuming most of it is taxed. So you're putting it in your TSFA account, and that money is now tax-free. Whatever you make in that account is tax-free. There are rules on how much you can put in. I don't know how much you can put out. I'm not really sure on the exact rules, especially with the US accounts, 401ks and Roth accounts and all that stuff. I'm not sure with the specifics, but I know if you're putting them in a TSFA account, that's tax-free. That's literally tax-free. You make all those gains, you're not paying taxes on those. So I would recommend looking into a TSFA account, looking into your allowance. If you haven't put any money in, I think I know how old you are. So I think you're able to do 30 to 40 grand in allowance to put in, and then you're going to have to start contributing per year. And I think once your tax bracket moves, you can put in more. I'm not really sure, but I would recommend TD, TSFA account, TD Ameritrade. That's what I would recommend. You can buy stocks on there and things like that. But I wouldn't recommend getting into stocks now because you may see some upward movement, but you will 100%, you're going to see, and you're going to be in the position for the downward movement, and you're going to start practicing patience on the wrong side of the market. So it's all about patience. Everybody's rushing to get into the stock market right now. Everybody's rushing to buy stocks. Marijuana is blowing up. Beyond Meat is the fad right now. I want to show you Beyond Meat, guys. And this is what we teach, technical analysis. We teach technical analysis and it helps you enter the market. Technical analysis is looking into past price, history, volume, just looking into the past data and being able to take an educated guess on where it's going to go. So if we're looking at TD sequential, this is a custom indicator from Tone Vase. So let me look on the weekly. We see a sell 9. This is a sell 9. This is on Beyond Meat. My father-in-law is in this, and this is a sell 9. So if I saw this on the weekly, I would have told him to get out. And you can see that this is a large red candle, almost engulfing candle. And then you can see that after it kind of retested this and couldn't break above, and now we started to go down. So if you just took this sell signal from here, wrote it to the bottom, that's a 66% loss. You'd put your stop loss here, so you'd automatically be out of the trade there. From 228 to 238, you'd be taking a $10 loss if it moved out in the wrong direction that you wanted to go. And from 229 to 80 bucks, that's a ton of money that you could have made if you went short. And now we are seeing a buy 9. With stocks compared to crypto, these candles are a lot more cleaner. You don't see these crazy candles. I'll look at Bitcoin in a second. So I feel like if you know your technicals, if you know how markets move, if you have like a feel for it, I find stocks, traditional markets are easier to trade than Bitcoin. It's so much more volatile. You'll get whipsawed out of your direction. So you can see this was a sell 9, and now we've had 9 straight candles to the downward side, and now this is a buy 9 on the weekly. The larger time frames give larger or more, they give more confluence, like more confirmation to these moves and to these signals. So this is the only indicator I'm using. If I was going to take a buy, I'd look at a few more things, but this is a buy signal right here. It retraced about, let's use the retracement tool. It retraced more than 78%, so about 80% of its price, and the stock market is bullish right now. I haven't looked into the company, but this could be a good trade. Not a good investment long term, specifically a good trade. Stop loss could be just a few dollars below. So that's basically, yeah, just trading some, I don't even know how we got it to Beyond Meat, but if you want to open up your brokerage account, you can start trading stocks. You can start trading them daily, weekly, position trade them, swing trade them. But I do think that you want to hold some long term. And I'm not saying get in now. I'm specifically waiting for the market to take a turn down. If that's 1 year from now, 2 years from now, 3 years from now, 4 years from now, I'll only have more money to go aggressive, more aggressive. Not only will I have more money, I'll have more knowledge on markets. I'll be able to watch the stock market for another 4 years. I'll have more knowledge on technical analysis, how markets move, price action, and I'll be more equipped to tackle the financial crash that we are about to see. Like I said, Warren Buffett is in $110+ billion cash. His positions are like $600 million. So success leaves clues. Look at what these guys are doing. A ton of people are speculating that it's going to come down. Just looking at the graphs, people come into the market every day and they buy. They don't even look at these graphs. And people are coming in every day and buying and selling. So if you're investing, even $1,000 or $5,000 or $10,000, I'd highly recommend learning the skill and taking your investment seriously, because you have an advantage over other people who are just on their accounts, on their brokerage accounts, looking at a stock, maybe like this, looking at stocks, ending up clicking gold, which isn't a stock, but end up clicking gold and then just buying it. And it's like they didn't do any research. They didn't do any research or, any due diligence to come to a conclusion that this is a good buy or a good sell. So you have an advantage learning basic technical analysis to pinpoint entries, exits, to know if you should enter this market or exit this market, or just to stay out of the market totally. So that's it for this video. We're going to go live on Bitcoin specifically. I am going to go to BTC USD actually. You guys can see how it wicks out. So let me remove all indicators, all drawing tools. I meant to draw all drawing tools. So you can see these wicks, and they're pretty large. You know, you could be short here or long here, and you can get wiped out just from these large wicks. You see, this is crazy. This is on the weekly. Even if we go on the daily, you have these large wicks, and you can place these shorts and whatnot, but you have to be very aware of stop hunting, and you're going to have to place your stop losses appropriately, or you'll get out of the position most of the times. You'll get wicked out. So that's it for the video. You now know which industry creates the most millionaires in the world. So if you want to be a millionaire, you have the best chances investing into stocks, obviously doing it correct. And I'm not saying invest $1 and wait for it to hit $1 million. This is continuous investment, managing your stocks. Obviously, you need to know what you're doing. You're not just going to hit $1 million like that. But there's a ton of opportunity, as I just showed you guys. Don't be rushing into the stock market. If you guys have any questions, make sure to post them below. Our education platform is very close to launching, going over cryptocurrency, how to buy cryptocurrency, as you guys can see, how to sell cryptocurrency, how to trade cryptocurrency, technical analysis, fundamental analysis, a bunch of TA, cognitive and emotional biases, and a ton more. So make sure to subscribe, like, comment, and we have videos coming out daily. That is the goal. So make sure to not miss a video. Hit that alert button. I think it's the bell button right next to the subscribe button. And if you guys have any questions, post them below. I will see you guys tomorrow.